Hi, how are you? We're back, baby. Futures are green today. No booze. Sad. But in every life, a little rain must fall. All right, guys, smash the like button before we get going, and let's do it. Man, we got a full morning. Of course, the jobs number came out There's so many excuses out there. What else do we have? Overall market, the Fed is not changing. Elon Musk, he doesn't like Bitcoin, Ethereum, Dogecoin, whatever you want to talk about. The best story came out of JP Morgan. An even better one came from Bill Ackman. And I think the greatest story headline to ever come out in journalism history came out about what's happening in the South, North Carolina, Georgia, this and that. It's unfortunate what's happening, but man, the story is epic. So smash the like button and let's do it. So we have futures. They're barely up right now. Dow's up basically nothing. S&P's up a little over a quarter. NASDAQ almost 1%. And before I start, a lot of people are asking what I thought about yesterday. So here's the NASDAQ from yesterday. The thing I want to focus on is the volume. You guys know me. I love looking at volume. Volume is energy to a car. No pun intended, talking about this Georgia stuff in the South. But this is energy to your car. If you don't have volume, you ain't going anywhere. Now, if you have only selling volume or only buying volume, you're going in that direction. So looking at this is the NASDAQ yesterday. Our average volume on the NASDAQ is 5.3 billion shares traded a day. Yesterday, our volume was below average, about 4 billion, maybe 4.1 billion shares traded. So if you go back and you look at what was happening in March and April of 2020, this volume right here, the real volume, was double the average volume. That was a true sell-off. That's true selling volume. Yesterday was people just, there was a lot of sellers and not a lot of buyers. So let's go look at the S&P. Same deal. 4.7 billion shares traded versus, call it 2.3. So we're not even touching average volume. Guys, I'm not saying that, yeah, and Spicer did bring this up. I give him a lot of credit for this because when he said it, I was like, man, good boy, Spicer. So this is not a true, I mean, yes, we had a lot of selling yesterday, but we didn't have a lot of buying. When you guys see a true sell-off that we saw when we dropped 38% or 40% or whatever it was in April of last year, when you start seeing double average volume, that's when you know you have a true sell-off on hand. I'm not putting a lot of credit in what's happened this week. I could be wrong. I mean, I hope I'm wrong, but I just don't see it. But we shall see, and we shall move on. Jobless claims. Do I believe that volume is a technical indicator? Yeah, I mean, I follow volume like first thing I look at trend, then I look at volume. If I don't have volume, then I'm not doing anything. So if you look at any trade that I've made in the Bid and Ask Nation, we always got to have volume. I never buy on low volume. So the initial jobless claims number came out today, and everybody's all excited, this and that. Guys, I mean, look back at the last 4 jobless claims that came out. We had the greatest jobless claims number ever, this and that, and now we had a terrible unemployment number, 26.6% of what was expected. But don't worry, it's okay. Jobless claims are going down again, so we Gucci. Just focus on what you want to focus on to make yourself feel better, and we'll go from there. So 473 jobless claims the week ending in May 8th compared to 490, and last week was just quietly upwards revised to 507,000. Don't talk about that number, though. Don't want to talk about that number. Just avoid that number. So let's go into I rarely do this, pull up the Yahoo Finance story about just going into the market, but there's a lot of interesting stuff in here. Bitcoin sank more than 12% yesterday. This Dogecoin is down almost 50% this week. I mean, I thought this was the next big thing. I don't think that those things are supposed to go down. They're only supposed to go up. And Elon said he doesn't believe in crypto. Like he stopped accepting crypto for buying his cars. And of course, he had a very nice spin to it, which with Elon, he could believe the way he spun it. I'm definitely not gonna take that away. This is my favorite quote of this entire story. This guy, I don't know who he is. Teddy Parrish, founder of Parrish Capital. Okay, so it's Parrish Capital. Okay. In regards to the market tanking the last couple days, it's good to take a breather. We've had such an exceptional performance over the past year or so, Teddy said. This pullback today, it's just common sense. So this is common sense. A little bit of a pullback. But the market being overvalued and this and that and all these indicators that say everything, that's not common sense. Okay. Teddy, you do you. I wonder if Teddy needs training like Nicole's dog needs training. Probably. Her dog's named Teddy too. All right. Investors have in turn also been pondering whether the Fed might step in to adjust its highly accommodative monetary policies. Guys, I mean, I personally do think that we are going to get they're going to have to cut, they're going to have to trim the increase the interest rates before 2023. I just don't know how, unless they want to just let inflation run rampant, which I don't think that they do. They've been saying for a very long time that they want to get inflation to 2% and no higher than 2% by the end of this year. I'm just not thinking that. I just think that they're going to try to counteract what's happening with inflation with raising the rates, which will probably kind of freak out the market a little bit. So, yeah, common sense is my least favorite phrase. Fizzbuzz, I call it uncommon sense personally. The central bank needs to keep rates low and sustain asset purchased at their current aggressive rate to support the economy, which is still emerging from the worldwide pandemic. Guys, they're never going to give this up. They're going to keep using this pandemic as an example for as long as they possibly can. And until a new story comes on that's bigger and better and more fitting with the times, because they're going to milk this bad boy until it runs out of steam. Let's see here. The Federal Reserve is unmoved by single data. So they talked to the Fed chairman the vice Fed chairman, Richard Clarida. He was surprised by the reading that came out about the jobs number. And I'm sorry, not the jobs number, the CPI. But he said that they're going to leave everything the same. Here we go. Clardia said the fresh data has not made the Fed any closer to pulling back on its aggressive asset purchases or near zero interest rates, noting that the economy has still not made substantial progress. So in one breath, they're saying that the economy is roaring and we're getting jobs back and the economy is coming back, baby, and everybody's buying and this and that. And then he says, we haven't really made substantial progress forward. Last I checked, I read a story last week that we are at the peak of our recovery because everything's coming back, even though California's not open, New York's not open. Restaurants are just crushed and out of business still, except for the big chains, and the mom and pops are all gone. But don't worry about that. But maybe now they're getting on board. So it's so frustrating. Before I started doing this show, I never read the morning finance news like I do now. It's just so frustrating to read this crap. The San Francisco Fed president here, Mary Daly, the inflation will pop in the next several months and it will probably go through the end of the year. I love that they're calling it temporary inflation. If somebody can explain to me what the hell temporary inflation is, please go ahead. And don't tell me the definition of temporary inflation. Explain to me what temporary inflation means. It means that you're going to get inflation and then you're going to go and say, okay, time to go the other way with inflation. Come on, grow up. But I don't really care about this. This is the big part. The central bank's next big policy meeting is June 15th, June 16th. Guys, keep a watch for it. There might be an emergency meeting that comes in before June 15th and June 16th. I think that's something that you'll want to keep a watch on. And that will probably shake markets a little bit. So, Bitcoin, Dogecoin. I wasn't going to talk about this because I don't really like talking about crypto, but Seth texted it to me this morning, so I said, okay, I will talk about it. Elon sent Bitcoin. Guys, right? If one guy can, so the market is fully hedged on the Fed, and the cryptocurrency market is fully hedged on Elon Musk. What the hell is this? Elon sent Bitcoin reeling on Wednesday. Think about what we're talking about right now. We're talking about the markets being totally controlled and admittedly controlled by the Federal Reserve. And there's a story that comes out that says Elon Musk is basically controlling Bitcoin by what he says in his tweets and what he says on Saturday Night Live. This is the world that we live in, people. Try to wrap your brain around that. Think about that today. Elon Musk sent Bitcoin reeling on Wednesday after he announced that Tesla would not be accepting it for its car purchases. Well, I mean, I kind of understand that. Tesla is going to be worth $6.3 trillion and to be doing $1 trillion in profit by 2030, according to some people. So I guess, yeah, this is probably a pretty big deal. Maybe I should readjust my thoughts on this story, because that I do. Man. Now I'm in quite a conundrum. Cryptocurrency is a good idea on many levels, and we believe it has promising future, but it cannot come at the great cost of the environment. So I guess he's saying that because you're going to be mining and this and that, it takes a lot of coal energy to get this thing going, get computers going. I don't really know, but I know Elon loves the environment, so he could be total. I mean, he's a little bit nuts. I love him. Don't worry. I love Elon Musk. I think he is one of the greatest personalities and inventors, not businessmen, inventors. I mean, he's truly incredible. But here come the excuses. So now cryptocurrency isn't good for the environment, so we're going to stop accepting cryptocurrency. Noted. The development has come as a shock to Tesla investors because Tesla owns $1.5 billion worth of Bitcoin on its books. I think that happened in February. Okay. And in Saturday Night Live, he referred to Dogecoin as a hustle. So that's pretty epic. All of this is so funny. I just don't. When you really start looking at this stuff every day, if you don't go at it from a comic view, you're going to go nuts, because this is nuts. Everything that's happening is just nuts. The world we live in right now is truly incredible. This is another great story from the Wall Street Journal. JP Morgan and others plan to issue credit cards to people with no credit scores. So let me refresh your memory here on a little bit of a story that goes back to 2006, 2007, 2008, when we were giving people that couldn't afford houses mortgages. But Mo, this is not the same. These are credit cards. You can't take out as much debt on a credit card. It won't affect things like a mortgage will affect things. Don't worry. It'll be okay. Okay, sounds good. All right, let's go see what's happening. JP Morgan, Wells Fargo, and US Bank and others will factor information from applicants' checking or savings account at other financial institutions to increase their chances of being approved for credit cards, according to people familiar with the matter. Oh, I think this is a good idea. I mean, we have the Fed controlling the market and Elon Musk controlling Bitcoin. And I think we should throw this on top. We should have people that have never had a credit card before go in and... Also, let me tell you another little story. Let me blow this up a little bit. Where am I? So before I started doing this, and before this pandemic, I was going to my local high schools around the area teaching about, personal finance, credit cards, this and that. People would go to college. I would teach the kids what a credit card is and what it does, because their parents didn't teach them. So that's great. And they would find out that you would have to pay these absorbent interest rates on these credit cards. So I said, when you go to college in your first semester and you're walking down the middle of campus and they want to give you a credit card and a free blanket or a free stress ball, don't take that thing, because it's not free money. You're going to go into debt. You're going to go into crazy debt, and you're not going to be able to pay it out and this and that. So my point in this is people don't know. People, for reasons of their own or not, I don't really care. People don't know what credit cards are. So before we just start going and giving credit cards to people, maybe there should be a little bit of an education on this first, because so people don't think that this is free money that we're giving away. So, all right, that's that. But yeah, I was truly shocked when I was going into these schools, and there was a lot of kids that were raising their hands at what credit cards were. They were their parents' cards, and they didn't know that you had to pay these insane interest rates on them, and that you had to pay them off every month. And if you don't pay them off every month, you get interest on the balance, and the balance just keeps incurring on itself and compounding interest, and boom, you're $100,000 in debt at the age of 19. So Let's see here. The effort to give away credit cards, if successful, would mark a significant change in the underwriting tactics of big banks, which for decades has enshrined credit scores and credit reports as main tools of determining who gets a loan. Yikes. You also have to pay off your credit card. So if you don't have money, then you can't pay it off, so you still can't get a loan. But what do I know? Those who pay with only cash or debit cards who are new to the United States. 53 million people in the U.S. don't have credit scores. I don't know. JP Morgan, Bank of America, and other big banks recently developed a risk model, and this goes back to garbage in, garbage out. Whatever you want to put in the risk model. I mean, they're big banks, but they probably had a risk model for the mortgage crisis that happened in 2008. So, and then of course we get into race relations and all this nonsense. So I'm not going to talk about that. But that is what's happening in the world. So we're going to create more bubbles, I guess. Why don't people know what credit cards are? The world has gone nuts. Simon, I'm telling you, it was truly, truly amazing and sad how many people didn't know what credit cards were. And I mean, these kids are 16, 17, 18 years old, but I mean, I knew what a credit card was back then. I mean, of course everybody knows what a credit card is, but they don't know what's behind it with the monthly interest that just keeps building on itself. That's in some cases 30%, 29%. So, all right, guys, smash the like button for me, and we'll continue. I don't agree with that. Yeah, Dave Ramsey says don't use credit. I mean, I don't want to get into the Dave Ramsey discussion. That would be an interesting topic. Who said that? APO. Maybe we can talk about Dave Ramsey one day. I really like Dave Ramsey. But yeah. Okie dokie. Let's go to Bill Ackman. He's one of my favorites. Just one of my favorite investors. He just crushed it back in March and November of I'm sorry, March and April of last year. Yeah. All right, here we go. Mo and Paul have any university degrees. Yeah, Paul graduated from Michigan with a degree in economics, and I graduated from Cleveland State with a degree in biology. Then I went to med school for 2 years and then dropped out. All righty. Bill Ackman. Big news yesterday. He got rid of his Starbucks position and he opened a position in Domino's. They were the first. Domino's was the first and best in terms of technology and delivery, their own delivery infrastructure, so they don't need to rely on DoorDash and Uber Eats. That's very, very logical. I thought this was a very interesting comment. It doesn't matter. The point is that differs from Bill Ackman and others. I can't say that Bill Ackman's a value investor. He's a very good investor. But he said that Domino's was never cheap enough. This differs from people like Kathy Wood and all these insane hype people out there that actually have to wait for something to hit a price because they have a reason to buy something and the reason to say that this is the value that it's worth, instead of just going and buying random stuff and saying it's going to go to the moon. He started buying around $300, $330 a share. I don't know what the stock price is right now. I don't know what the value is. I absolutely have no idea. The point is, it was never cheap enough. He waited. When it hit that price, boom, he went and got it. So, yeah, that's that. I never graduated medical school. I just went for 2 years. And then I said, this healthcare system is completely shot. I want nothing to do with it. And I wanted to control things myself. So here we are. Okay, on inflation. Bill Ackman, it's not temporary. Duh. Somebody that knows something says it's not temporary. The only person that you're going to hear say it's temporary is people that want inflation to be temporary and think that it can be temporary, and people in the Fed. First of all, it's too hard. This was an excellent point. I did not even think about this. It's too hard to roll back wages once you roll them up. We're increasing wages right now, and you can't increase them and then say, okay, inflation's gone, let's get rid of it. And by the way, we're going to bring your wages back down. Ain't going to work that way. It ain't going to work that way without chaos and fighting and this and that. Bill Ackman's stance on crypto. I like this one. I agree with him. It's a fascinating phenomenon. I think it's a brilliant technology. It's cool. I'm totally impressed that it's never been hacked on a grand scale in over a decade. I kick myself for not understanding it. Bill, I don't think anybody can understand it. It's one of the best speculations ever. Boom, nailed it. Um, it's not a place I would feel comfortable putting any meaningful assets. There is no intrinsic value. Nailed it. This guy is good. I like him. Now, I wanted to talk about this thing on New York City. New York is an extremely desirable place to live. To some. It's a big tax city burden, and when high-income people do the math, they say, I could live in a no-income tax state like Florida, South Carolina, any of the 7 out there. But he made a great point here, and it's a point that I never really believed until late. If you run away because of taxes, I don't know. I mean, I guess if I wanted to run away from Ohio, I'd rather live in Ohio than live in a no-income state, no state income tax. So I am starting to agree with his feelings on that. You just pay for it. Whatever. Here we go. All right, guys. Greatest story ever. Now, what's happening in the South sucks. I was just texting my friend Rusty, and he's like, I literally cannot get gasoline. And he's like, people are just going out and just buy. I said, this is toilet paper, except it actually matters. So do not fill plastic bags with gasoline. I never thought I would have to read a story like this, but I hope you double bag it. And we know it sounds simple, but when people get desperate, they stop thinking clearly. They take risks that they can have deadly consequences, of course. If you know somebody, this is a PSA, by the way. This is an Everything Money, Trader Mo, Bid and Ask Nation, PSA. If you know someone who is thinking about bringing a container not meant for fuel, please let them know it's dangerous. And just in case, please tweet it out. Please go and retweet this, just in case. And you can hashtag Trader Mo, just so that they know that I'm telling everybody. But yeah, look at this. This is crazy. I guess there's a pipeline or something that burst. I honestly don't know. I didn't look into it. Probably ignorant on my part, but oh well. So these 2 states are getting wrecked. Georgia's getting wrecked. But yeah, okay. I live in Tennessee and people are going crazy. Yeah, I mean, you could see it creeping up there and over into Tennessee. I mean, we live in Ohio. I'm just looking at Ohio right now saying, ooh, maybe it's getting there. But there you go. Tim sent me this picture this morning. And I said double bag it. Man, come on. You can't even put a double bag in it. I use these Walmart bags for my little trash cans all around the office, all around my house. There's holes in them all the time. What are you doing? Gas is expensive. So, all right. That's what I got for today as far as the news goes. What an interesting news day. Let's see what the futures are doing right quick. And then we will start. Who's calling me? Oh, Mikey's calling me right now. All right. Doesn't he know I have a show to do? The pipeline. Oh, that's right. Thanks, Gary. Pipeline got hacked. That's what it was. All right. Futures are still where they were. Let's look at the Treasury yield real quick. Same. 3-month is pretty much the same. Guys, I'm watching this thing to go neutral. I explained to you yields the other day. I won't explain it again this week, maybe again next week, because I think it's important to keep an eye on. But yeah. Why would anybody pay hundreds of thousands of dollars for wallpaper? I don't know what he's talking about. If you think that that's wallpaper behind me, you are mistaken. Let's talk about the Everything Money software real quick. Guys, I think I keep talking about this because the value is incredible. So this is our Patreon. With it, you get, if you want to jump into the lowest level and you just want access to our software and very few, you still get exclusive content, but you don't get the same exclusivity as you do if you join the Bid and Ask Nation. But $23 a month, you get access, you get all of our software, you get discounts to some stuff, you get our fireside chat once a month, and it's fine. Next, Bid and Ask Nation. This to me, I mean, this is where you get the value. If you're interested in trading, you get to talk to me all day. You get to talk to all of my little proteges all day, and we make a lot of money in here. I'm going to start doing some charts in a few minutes, and we can go over and you can see what I do. Go and look at the new series that's out there, The Employed Trader. But if you join Bid and Ask Nation, you get access to me. I do seminars probably every 3rd Friday of the month that are just private for you. I I make short videos on stocks. I answer all. If you have an individual stock question, say you want to buy Oracle, send me, say, Trader Mo, look at Oracle for me. I'll tell you what I would do. Plus, you get discounts to all of our businesses, and you get the Everything Money software for free. The value is crazy. I've had people say that they have made 1 month of Patreon in one trade. I've also heard people say that they get 10 years of their Patreon in one trade. So, guys, send me some stocks. We'll get at it, and yeah, let's get at it and start moving on. I want to look. What do I want to look at this morning? I want to look at. Well, first of all, let's look at Apple. Apple's moved into a downtrend. Boom. Not ideal. It's sitting right now. The ideal thing is it's sitting right at its 200-day moving average. Okay, that's where you're at. Tech is rebounding a little bit today, so I think you're going to be fine. Let's keep an eye on Apple and see what we got. Now let's look at the S&P, and then I want to look at XLK. So the S&P, the trend is not down yet. We are red under yellow, but we are not under our 80% line. So we're still fine. I mean, we're sitting right at the 50-day moving average. Like I said, according to the volume that I was seeing yesterday and the day before, I'm not convinced that we're going to have any kind of insane pullback. So, but I could be wrong. What else did I want to look at? XLK. Let's look at the tech. Okay, so tech is in a downtrend. You are red under yellow, coming through the sweet spot. You drop below the 100-day moving average. Yeah, tech could be in some trouble. But let's zoom out and just take a look at the overall chart from a year. So tech has not gotten below this 32% area in over a year. It just keeps doing these sweet spot reversals. So sign of the times, baby. Sign of the times. Let's see here. What do we got? Walgreens. Okay, I'll do Walgreens. And let's do Walgreens. Walgreens Boots. What an interesting name. All right, same with Walgreens. They've been doing these sweet spot reversals, and honestly, it can't really choose a direction. It has just been consolidating since March in this range between $56 and a little over 51. So it just can't. If you take a look back, it's just stuck right at its 50 and 25-day moving averages. 25 is purple, 50-day is yellow, and it just is stuck right there. So to me, I'm not doing anything with Walgreens until it chooses a direction. This red line for me has to go like that or like that. Choose a direction, baby. We'll go from there. Let's see. Walmart, I'm keeping for the bid and ask nation. Seth, did you really time Mason out? Wow. Mason. That sucks for you. Yikes. eBay is something. All right, Matt, I'll do INVA next. eBay, guys, they had a night. Let me use yellow. They had a gap down. That was from earnings. And we just started trending down. All this is a snapback. So it's just snapping back. And you can see yesterday it came down with the market. Today, look for it to come down more. It's just bouncing off its 100-day moving average. So just be careful with eBay. Honestly, I wouldn't short this until I got below the 100, and I probably wouldn't go long on this until I got above the 25. That's just personal opinion. My opinion can change. If you want more detail, join the Bid and Ask Nation. INVA. Is this Innovivo or something? No, INVA. Innoviva. Learn your vowels. Oh, okay. What do we got here? Oh, interesting. Let me zoom out here a year and just take a look at what we got going on. Okay, so it's a 50%er. You have your top, you have your bottom, and you have this 50% area that it just can't break through. This is your overhang right here, and you just have this downward negative pressure on you. So I'm not banking very hard on Innoviva. I feel like I sound like Dave Portnoy. I can't spit it out. Innoviva getting over $13. Now, if it breaks through $13 and it pushes up here in this area, fine. But that is the struggle that you have. And what is the volume on this bad boy? Yeah, this volume sucks. This is let's look at 6 months of volume. Look at the volume you had pretty decent volume back here, and then look at how low this volume has been for the past couple months. You ain't going anywhere on that. I do want to look at Bristol Myers. Let's see. BMY. And then I'm going to do one more stock, and I'm going to get out of here. The market's open right now. Let's see what's happening. Market is open. NASDAQ's up 1%. S&P's up 0.5%. Dow is up 0.25%. All right. Bristol Myers. Uptrend. Guys, Bristol Myers they can't break through $67. That's just what it goes. All right, let's see. Hi Mo and Paul in the chat. Could you do a video on a complicated stock like 6 out of 8 pillars? Hey, thanks for the $5. I appreciate that. I'll look at that right now for you, but can you please join the Patreon or send that to us? Actually, you know what? We're doing a Seth, if you're still here, please message him. Okay, I'm gonna look at this PBR thing for you. So this is actually, man. Yo, what's his name? Malthusian. I think that's how you pronounce it. Can you please tell me if you're in the Bid and Ask Nation? I want to know that, because this is actually a very good stock that you came up with. So we're moving up through the sweet spot nicely. I mean, I wouldn't get it now, but the problem is you're stuck at this 100-day moving average. That's your problem. And I don't like that. If you can somehow find enough volume to push yourself through here to break through, then you'll be okay. But as for right now, not going to work. So, all right, guys, that's it for today. I appreciate it. This is a good show. Smash the like button on your way out. And we'll talk about, we got more tomorrow. So tomorrow we're going to go over more news, wins and losses of the Bid and Ask Nation. That's all I got. You guys have a great day. And go make some money. Peace.